Now, a LexisNexis Risk Solutions report indicates that most global lenders have identified collecting delinquent loans as a primary challenge. Lenders are thus increasingly turning to alternative credit data for greater effectiveness in helping predict consumer credit risk. Kevin King, Vice President of Credit Risk Strategy at LexisNexis Risk Solutions, joins us with more detail on the findings of the report and what it suggests about consumer lending confidence. Thank you so much for your time, Kevin. Now, please just shed some light on the biggest battle between consumers and lenders in this economic climate.
I imagine most lenders don't want to describe the relationship with consumers as a battle, but there is a struggle, certainly, over profitability. We know consumers need access to more affordable forms of credit, but lenders need to turn a profit. And the result is that for many financial products, around 70% of consumers who apply for loans today in South Africa are being declined. That's not something that's terribly sustainable, is going to create that feeling that there's a battle. And it's our hope that some forms of additional credit data might be the answer.
And is this also maybe because you talk about the fact that a lot of consumers are being declined for credit, whereas it's more of a supply issue that is the problem rather than demand, because there still will be demand for credit, but just that to protect themselves, the lenders are just saying, you know what, let's also just close off the taps a little bit here.
Yeah, I think that's certainly it, right? There's clearly no problem with demand for credit. It's been going up for years. This is all about lenders finding a way to profitably lend to a broader set of consumers in South Africa. And we know that can be done by better evaluating consumers and also by lenders creating products that might be better suited to serve consumers that may not have stable incomes, but can still repay loans if they're structured in the right way.
Yeah. Well, let's actually talk about that evaluation. Would you say that the current structure of how lenders assess credit risks from consumers is maybe inadequate at the moment, particularly with these specific challenges we have in the economy right now?
Yeah, I really think our report says exactly that. When we surveyed South African lenders, we saw roughly half of them felt less confident than they did just 1 year ago in using those traditional credit data systems only to make lending decisions. 90% of them said they were getting more comfortable than just a year ago in pulling in additional data. And we realized that somewhere between a quarter to half of all applicants in South Africa for credit products don't have a credit score, which almost always means they're declined. There's no question that the current system isn't fully adequate. Now, what I would say, Zanatha, here is that it's not just about the system getting worse every year.
Yeah.
I think a lot of these problems have been there for a long time, but there weren't always solutions. There weren't always alternatives. And it feels like we're starting to get that now.
Do you also maybe think that this is a question of tailoring, where the answer maybe needs to be tailoring to specific consumers rather than maybe using one big blanket structure to assess the credit risk?
Yeah, I think there's a lot of truth to that. Zanatha, I'll speak from a credit data perspective. Yeah. We don't all live our lives the same way, right? Some of us use our phones for more things. Certainly, we use our phones a lot more than we did 20 years ago. Right? But if we're only using data that was around 20, 30 years ago, that's not always going to be a great reflection of a consumer's ability to manage a loan. So I couldn't agree more with your statement.
Yeah. What kind of alternatives, though, should we be looking at here in terms of that assessment?
One thing I'll say, we use the term alternative data to talk about these data assets, but very often they're supplementing, which is to say many lenders, not all, but many lenders are going to still use that traditional credit data provided by the four main credit bureaus, but they're going to be adding this on top, right? And the kind of signals might be online or phone data that gives us an idea on how consumers are managing their day-to-day lives, utilities and bill payments. The key factor here is to find predictive data that you can use legally and is going to help assess more South Africans than the current traditional data can alone.
And I'm wondering if there are any signs yet, Kevin, of consumer credit relief maybe being evident from here on out as we are now in the beginning of the interest rate cutting cycle.
Well, we talked earlier about some of the really strong economists in South Africa. I read the same reports that you do, and there are some positive signs maybe on the horizon from an interest rate, a GDP standpoint. It feels like unemployment rate, which is going to matter a lot here, is still a little ways off from seeing improvement. But what I would want everybody to understand, whether you're a lender or whether you're a consumer looking to get loans, is there are ways to improve the current situation that you can control, right? That are not reliant on broader economic trends. And the big one that we're talking about in this report is data, pulling in additional information so you can assess most consumers on their behavior versus a lack of data.
Okay.
And the second thing is designing those financial products that are going to be more affordable, not just for consumers, but provide lenders with more ways to serve those consumers and their communities.
All right. Well, we do have to wrap up the conversation there. Thank you very much for a very insightful conversation. Kevin, that was Kevin King from LexisNexis Risk Solutions.